Hey guys, this is Tim Melvin of Banking on Profits coming to you from down here Sunday morning, down here in beautiful Central Florida. Going to get this out of the way today because we have an incredibly busy week. The youngest one's got a camp I've got to shuttle her back and forth to get her ready for high school a couple days this week. Got a couple things happening on deadlines, some research projects. I'm going to go ahead and send out a little video on Sunday morning. I doubt much will happen over Sunday night to change our view of the world anyway, since nothing's really happened to change our view of the world in the last 4 or 5 years. So, anyway, looking at what's going on in the banking industry, we are seeing in the last couple of weeks some rising credit issues, let's call it, according to a report from SNL Financial. Loans delinquencies rose in 7 of the 11 categories that they follow, with the real damage coming in cards, and farms. They continue to be a little bit weak. Look, we knew this was going to happen in the auto industry. Auto industry sales are falling off, and it's because credit's tightening. They were using basically fog a mirror financing there. In other words, if you could fog a mirror, you got a car. Loans to auto dealers and auto customers, not a big enough segment to collapse the economy the way real estate markets did back in 2008, but the auto lenders have certainly been using a very similar philosophy. Still not out of control. I think it's going to continue to get worse because there were a lot of cars sold that just simply shouldn't have been sold. Subprime auto became a thing. Anytime subprime becomes a thing, it's a problem. There's a legitimate home for subprime lending, but when it comes widespread, it usually leads to disaster. I think we'll see more problems out of the auto lending portfolios. Credit card increases were inevitable. They're still below historic levels at most banks. Not really a problem there. They always tend to run a little hotter than the rest of the loan categories. When I look at the ones that matter, like commercial real estate, don't really see a problem in either owner or non-owner occupied commercial real estate at this point in time. With commercial real estate, it's not necessary that prices continue to go up. They just need to not go down. Occupancy rates stay pretty reasonable, and the bank lending portfolios of commercial real estate will be fine. And that, for many of our banks anyway, is really the bulk of their loan portfolio. Community banks tend to be heavily CRE focused. So, great jobs number on Friday, well over 200,000 jobs. That's what we want to see. Some of the good job classifications. Construction saw great gains. Restaurants, of course, the lower end jobs continue to show strong gains. Fact of the matter is, it was a solid jobs report. Two things that we don't like to see: absolutely no wage growth, and the actual unemployment rate fell because there are people coming back into the labor force participation rate because the job market's better. They've gotten up off the couch, turned off Oprah, and are now out once again after a break looking for a job. How strong the economy is going to be to provide that job, or what kind of job, that we don't know just yet. We've been an advocate of the fact that the economy is better than it was, but it's not great. We still believe that. I've said this before. If you're preparing a child for the future and you want to make sure they're never unemployed, make sure they learn to code and program, because that's going to be the middle class of the future. Anyway, enough of my social commentary. So bank loans, we looked at the big picture, and really, you got a 60 basis points non-performing assets ratio out there. Banks have increased their balance sheet substantially since the credit crisis. So at this point in time, bankers still have not started doing anything stupid, and that's great for us. As I've said repeatedly, they're going to, at some point in the future, they're bankers, they can't help themselves, they're going to reach for return, and something bad will happen. Hadn't happened yet. The lead story in Barron's this weekend, something I've talked about before, is the massive amounts of money that are flowing into passive and index investing. And what scares me quite a bit is I don't think most people have any idea what they're doing with their money when they buy these passive index ETFs. I had a friend of mine, a hedge fund manager, a deep value guy, been around for a very long time, told me that he turned down $1 million new investor last week because as he talked to this woman, she kept saying things like, I don't own any stocks, so I want you to manage the stocks. He said, well, you have no stocks? None? Oh, what's all the money in? She says, oh, no, it's just in bonds and ETFs. Well, all the ETFs that she owned were equity oriented. She just did not understand that by investing in the equity ETF, she was investing in stocks. I've seen this before. I saw it back in the mid to late 1990s. Nobody owned stocks. They all owned mutual funds. So we've seen it. It's, again, a sign of complacency on the part of investors. They're not even taking a minute to figure out what they're doing. Wall Street has sold them that if they buy this low-cost index ETF, they're just going to make money forever and ever and ever, and it's the absolute best way to do things. And I love the low fee part of it. I think that's an important part of the investment equation, but most people do not understand. When you buy an ETF or an index fund today, you are in fact, if you're buying the S&P 500, buying stocks at an average price to earnings multiple north of 25, around 3 times book value, with very slow earnings growth. Now, does that mean markets have to come down tomorrow because of those valuations? Of course not. Stocks can stay overvalued for a very extended period of time. I've seen it throughout my career. With interest rates very low, it's tough to see any reason for stocks to go down unless, A, the Fed's raise rates much faster than we currently expect, or our friends in North Korea, Russia, or the Middle East do something phenomenally stupid. Don't underestimate their ability to do something phenomenally stupid. In fact, there was a great article this week that I read, and I forget exactly where it came from, but the name of the article was Afraid of North Korea? You're Not Scared Enough. It just made the point that it looks like he does have a missile now that can hit parts of the United States, certainly all over Asia, parts of Europe, and he may be able to put a nuclear tip on the thing. That's bad. He's insane. That's worse. So, and of course, we're doing live fire exercises with the South Koreans right now. That's just going to agitate the guy. I don't think he's stable. I don't think China will necessarily be able to rein him in when they need to. So my favorite flashpoints, well, my good friends in the Middle East will never underestimate their ability to do something stupid to cause a geopolitical event that can roil the markets. But North Korea, the United States, we have to keep an eye on that because it's getting quite messy. Anything that happened on the Korean Peninsula is probably going to be bad for markets. But without that type of incentive, some sort of event, stocks have absolutely no reason to go down at this point in time. Now, the Barron's article really stressed that there's just tons and tons of indexes, and that's all anybody's investing in right now. They talked about the massive inflows away from managed funds into passive funds. Keep it up, guys. Just everybody, please index your money. Don't look at these small little banks trading at book value with activist investors involved in great balance sheets. You should absolutely buy the index. I think you need to stay out of this bank stock area. It's illiquid. It's dangerous. Only crazy people invest there. Please. Don't look at that. Index your money. The more they go into indexes, folks, the more opportunities we have, the less competition we have when we go to buy stocks, and all that's a good thing. Should the markets fall, those in indexes are going to see something that works a lot like portfolio insurance, where selling causes selling. Unless it's some sort of financial crisis, a la 2008, which I do not see, because, like I said, bankers aren't doing anything stupid. Don't see anything there. Our stocks will go down nowhere near as much as the stocks that are in the indexes and the ETFs, because they will see selling causing selling, a la 1987, and it'll just be a bloodbath. In the meantime, we'll be able to put some money to work in bargain-priced banks. Not predicting it, don't know when it's going to happen. I know we will see a bad market at some point in the future, and if all the money's in indexes, we will see selling cause selling, and it will be something of a dramatic bloodbath. So anyway, what else are we looking at? James Gorman, the CEO of Morgan Stanley, good news. He is wildly bullish on banks. He said that banks, and I agree with everything the man said, banks have lots of capital on their balance sheet. There's money out there to lend. The economy's getting a little bit better. We're probably not going to see regulatory reform on our time frame, but I think we're going to see it simply because we absolutely have to see it at some point in the very near future. We're handicapping our economy with Dodd-Frank regulations. At some point, the goofballs in Washington will quit trying to score points for their team and stop for just a minute to think about their country, and then maybe we'll start to see meaningful regulatory and tax reform. Just not quite sure what it takes to wake those folks up so they can stop the game of scoring points for the team. Hopefully it does happen, and it happens in the next year or so. We get regulatory and tax reform, and that is a reason to be very bullish on banks, because I've seen estimates that tax reform alone could increase banks, particularly community bank earnings, by as much as 30%. That's not going to upset us the least little bit. So I'm also pretty bullish on banks going here. Bankers aren't doing something stupid. Most of our banks have outstanding loan portfolios. We're coming into earnings season now. I think we're going to see what we've seen the last several quarters. Strong earnings growth, more buybacks, dividend increases, solid credit performance, and it should be another very good earnings season for Banking on Profits subscribers. So what else do we have here? Baseball. We'll go ahead and tackle baseball. The Baltimore Orioles, folks, this is big news. They finally won a baseball game yesterday. Whether or not they can follow that up today, I don't know. Going into the All-Star break, we've been playing terrible. Been losing to teams we should be beating. Our pitching is really struggling. We're putting some runs on the board. We were a little weak last week, but for the most part, we're a little bit above average as far as runs scored, and our big boppers are hitting home runs, but our pitching staff is giving away games. You can't keep losing games 14-6, 9-5. Those are games that, you score 5-6 runs in a baseball game in today's world, you should have a good shot of winning that game. We're going to need a tremendous second half to be competitive. Towards the end of this week, I'll also be going ahead and revisiting my baseball projections. And surprisingly, I've got most of the division leaders right. I think the only one I'm missing so far is the National League Central, where the Brewers have come out of nowhere. They are the hottest team in baseball this last 10 days, mostly thanks to the New York Yankees and the Baltimore Orioles, who they just beat the stuffing out of all week long. But that's a good young club. They've got power, they've got speed on the base paths, and the pitching staff is doing, frankly, much better than I could have ever anticipated. The Dodgers, Houston, Cleveland, the Boston Red Sox all continue to be among the winningest team in baseball over the last week. As we go into the break, looks exactly like I thought it would, but below those division leaders, there's been some real surprises. The Chicago Cubs not playing well at all, the Minnesota Twins playing very well, and some other fun stuff that I'll have to talk about, and I'll put that up in my regular blog and get that out. Towards the end of the week, we like to do that baseball wrap-up. Got the All-Star game Tuesday night. That should be fun. I haven't missed one in years. Don't plan to miss this one either. So at least this year we're back to normal. The home field advantage is going to be decided by the team that had the most wins during the season, and not whichever league won the All-Star game. If an All-Star game is a tie, it's a tie. It doesn't matter. It's an exhibition. It's just a lot of fun to watch. Got the Home Run Derby on Monday night. The game on Tuesday night should be a lot of fun again this year. Let's see. Good books. Book of the year, folks. The Force by Don Winslow. Always been a Winslow fan. Love his books. If you haven't read them, you should read a few of them. But the new one that he just came out with, The Force, the best book of the year so far, bar none. Take it to the beach. Take it to the pool. Sit out on the back deck, with a nice glass of wine. However you read it, read the book. It's a fantastic novel. Really enjoyed that one. Also reread American Gods this week by Neil Gaiman. Read that when it came out 10 years ago and loved it. I've read several of those others. Some I liked, some I didn't. But this one is a very powerful book. Loved it then, reread it, loved it now. My wife is in the process of reading it, and so far she likes it as well. So anyway, that's my 2 book recommendations. Don't have a lot on the new book front this week, but a look into August tells me that it's going to be a very busy reading month for me, because a lot of my favorite authors have books on the calendar. Can't wait to see that. So anyway, where are we? We're in a very pricey market. No question about it. No real reason for it to go down. Lots of money still coming into it. We're proceeding with caution, as always. Stick to buy list stocks, please, either in the main portfolio, the bonus banks, or the focus banks in the Community Bank Stock Investor, the new report of which will be out towards the end of this week as well, with all the screens and insider and institutional filings and 13Ds. No 13Fs yet. That'll come out in August. We'll finally start to get a peek at those, and we'll have those. So that'll be out. We'll have a couple good focus picks for you. We've got a guest article I'm really excited about for this month's edition. So if you're not a subscriber, please go to marketfi.com and sign up for this. We have a tremendous track record. We've made money. We've done it with greatly reduced risk. In the main portfolio, we've never, 4 years, never had a losing stock, never closed a stock at a loss, and all of the portfolios in the stock currently trade for more than we purchased them for. So got a couple stocks pushing the edge in the portfolio. If markets continue to go higher, we're going to sell them. Got a couple bonus picks that are right on the line as well. So if we see the markets back down a little bit, we may be able to get some money to work in some of these smaller stocks. For right now, we're in no man's land. Stick to the buy list stocks. Build up a nice inventory of good books to read. watch a lot of baseball. It is summertime. Have a nice glass of cold wine, a nice cold beer. I'm not a big beer drinker, but we went down to High Tide Harry's, a seafood joint here in Orlando not long ago, to get some Maryland-style steamed crabs. You got to have a beer with Maryland-style steamed crabs. So I looked at the menu, and I ordered something from the Cigar City Brewing Company called a Florida Cracker Beer Ale. Now, you guys know I'm a big fan of the Florida Cracker novel, so I had to try it. Fantastic beer. Actually bought a 12-pack and had it for the 4th of July and still have some left in my refrigerator. If you're a beer drinker, check it out. It's a really good beer. Anyway, cautions the watchword of the day. Stick with the buy list. All-Star Game weekend, The Force by Don Winslow. That's what we have going on here the first weekend of July 2017 down in Central Florida. I'll be back with you guys next week. Excuse me, I have picked up a little bit of a summer head cold, so I guess I probably sound a little funny this week. But busy week, going to get the video out of the way. I hope you enjoyed it, and I will talk to you next week.